All right, so let's talk about your credit report and why mortgage lenders always want to see it. I'm Andrew Gavin. I'm a licensed mortgage lender and I sell real estate here in San Diego. Okay, so there's two main reasons why we want to look at your credit report. And most of the time we can get this information doing a soft pull. So make sure your lender is doing a soft pull versus a hard pull. Now, the two reasons. One, we need to know what your credit score is because every loan program has a minimum required credit score. Conventionals are about 620 to 640 from most lenders. FHA is anywhere from 550 or 580 with different deposits. VA does not have a required credit score to qualify, but each lender that offers the VA loan wants you to be around 600. Once we know you qualify for the loan programs we want to use, the next thing that affects how much home you can afford is your debt to income, which is basically your income minus any debt that you have, credit card, loans, school debt, auto payments, and your new mortgage payment. So what I've done is I put these three charts together and I want to show you if you have the difference of $300 to $400 of debt changes how much home you could actually afford to purchase based on the debt to income ratio. In this example, it looks like you could buy a house for about $490,000. You would be able to borrow about $460,000, $465,000 based on a $120K income with all the same loan parameters and just $500 in debt, which might be a couple of credit cards and maybe a low car payment. It's pretty common. All right, so you had $500 in debt. I've taken the same scenario, but I've added $300 for a total of $800 of debt. Still making 120 grand, but you've got a little bit more debt. Maybe you have a bigger car payment, or maybe you have two car payments, husband and wife, I don't know. But you can see that extra $300 dropped your purchase price from about $490 all the way down to $450. And that's 40 grand of purchasing power lost because of a $300 debt on your credit. Now this last one, I added 400 to the 800, and this drops you all the way down to $400,000. Total $50,000 of purchasing power gone because of $400 in debt.